Hey, good morning, everybody. Welcome to Thursday, November 19th, as we start to wind down the week. Yesterday, man, things kind of sheltered down and went down yesterday. We ended up way off our highs of where we were yesterday morning. So, hey, Dave and I will discuss what's causing that. And the question is, will it continue today? I can't emphasize this enough. The one thing that you can control within your portfolio is the amount of risk that's there. And that's why I developed the financial x-ray. Between 0 and 100, how much risk do you have in your portfolio? If you don't know, you need to give me a call and get on my schedule to get a financial x-ray. 863-382-0037. That's 863-382-0037. Hey, Dave will be here in just a moment. We'll talk about jobs. We'll talk about what's happening in the market, what's causing this downturn.
Bull and Usher there. It's 8:39, 21 here before 9. Check in on Wall Street, see what's happening to your retirement fund up on Wall Street this morning. And, well, we kind of had a change in mood midway through yesterday, I think. Let's go downtown and talk about it. The office of Statler Financial Services. Phillip Statler standing by. Phillip, good morning. About 2:30 in the afternoon yesterday, they made the announcement that New York City was going to close its school system, and that kind of woke everybody up, and they started selling like chiclets, didn't they?
Well, they did start selling off, and you take that response with some of the other responses we've seen from state governors, and now we're seeing mayors, even here in the state of Florida, starting to think about and consider, some more aggressive approaches to shutting down. So that's going to be interesting to see how that plays out. I think we have a small indication today when you and I talk about jobs that, we may be going down the path of increasing unemployment claims between here and the end of the year.
The possibility that at the very least you can call it malaise on the statistics. Resetting the table briefly after that little bombshell about a bunch of gubernatorial reactions to the COVID outbreak. Michigan tightening up their lockdown. California ruminating about whether or not they ought to go into total lockdown out there. New York closing the public schools and making it a virtual learning experience. Dow ended up down 345 points yesterday. NASDAQ was down 98. Standard & Poor's was down 42. We're starting to erase those gains from the couple of trading days we had after the virus, after the vaccine euphoria we had earlier, and it's not looking quite as good. You mentioned the claims, and first-time unemployment claims, they were kind of a miss this morning, off by about, doing my math, about 35,000 off of what my people were expecting, weren't they?
Yeah, and that's in line with what I expected too. So we had more first-time claims than were expected. And that was last week, right? And so we're seeing a lot more closures and shutdowns this week. So I expect that number to start to grow as we get that number next week. And with Thanksgiving, I'm not sure if we'll get it on Wednesday or on Friday, but that's going to be interesting to see how that plays out, because I think that's going to weigh on our unemployment numbers. I mean, I know that we got a surprise on continuing claims, which was a good thing, but I think a more pressing number is how much are we going up every week, because we've seen 3 weeks of declines, and now we're starting to see it go back up.
Yeah, the actual number is 742 first-time unemployment claims last week. Market was expecting around 707, so that was a miss. And what you're referring to is the continuing claims. They actually decreased substantially down to 6.37 million continuing claims. That was a pleasant surprise. Were we not looking at the news of the shutdowns and the lockdowns and the school closures this week, we could actually be optimistic and talk about the continuing claims being good news. But then again, this week's events kind of make you wonder whether or not that's going to kind of turn a quarter next week, isn't it?
Oh, that's true. That's true. Hey, you mentioned Michigan, and I just want to throw this out there. You and I didn't talk about this beforehand, but reading an article, and Wayne County in Michigan, that's the Detroit area, they supposedly certified there or voted to certify the elections. Well, the two Republicans rescinded that certification yesterday. And so it's going to be interesting to see how that plays out going forward.
It once again adds uncertainty into the financial picture as well as the news picture overall. And as we've said time and time again, almost ad nauseum, if there's one thing Wall Street really doesn't like, it's uncertainty and an increase in risk that they can't control.
That's right. Risk is a thing that, I mean, nobody likes uncertainty, and especially the markets. That's just one of those things. I like this headline too. The chief investment officer at JP Morgan said, "I'm not ruling out a Trump re-election yet."
Woo!
Yeah.
That's one of the first voices from high places actually saying, yeah, he's playing out the string, he's doing what he legally can, but nobody seriously expects the election to get overturned. When JP Morgan starts saying, hey, it could happen, you start to kind of wonder, don't you?
Well, and he said it's a remote risk. He says, but I'm not throwing it out, you know.
And it's true. There are a lot of things between the cup and the lip. December 12th, I think, is when the Electoral College meets, and electors are chosen by their state legislatures. By custom, they follow the vote in their states, and given the way the numbers have piled up, albeit them very close, the odds are remote of a change, but state legislatures and Republicans do control a majority of the state legislatures. A lot of slips between the cup and the lip. Things could happen that could go on the strange side, couldn't they?
It just adds to the uncertainty, Dave.
Absolutely. And whether or not your politics swing right or swing left, uncertainty makes things, let's just say, weird in general. One other indication we had in this, once again, looking at last month, talking about the business conditions and what could go on in the future, the Philly Fed releases their manufacturing and industrial index. It showed a pretty precipitous decline last month as well, down to 26.3. Again, the absolute numbers are calculated differently, but down is the direction that we saw, and that's the news item for the day out of the Philly Fed index.
Yeah, and we've seen that from a lot of the other indexes, right? The New York, the Michigan sentiment. So that seems to be the way things are heading right now, is in the down direction and not the up direction.
Yep, that's the point. Earnings season continues, and I saw a couple of big ones come up, especially for computer geeks. One of the big card manufacturers reported and kind of kicked butt, I gather.
You must be talking about NVIDIA.
I'm talking about NVIDIA, yeah.
So yes, they did. They I don't know, I'd say kicked butt, but they did well. They beat by a little less than 35 cents a share, which was good. Revenue beat forecast too, so that's good things there. But they're coming under some pressure, because of I think the current quarter indications that they gave. So they're not really they're not tearing it up on the market this morning. They're actually down about 1%.
Yeah, the headline I saw was that they'd kind of beat it out of the park, which everything beating numbers qualifies as beating it out of the park these days. I thought we were going to have a big uptick on NVIDIA. They didn't show up on either one of my lists this morning.
And that's why, because the current quarter is not what everybody thought it should be.
Answers a lot of questions.
Yep, they were down as much as 2% earlier this morning.
Okay. What else have we got out there?
So we've got some more retail to talk about today. We can start out with the big name Macy's. Macy's lost a lot less than it was expected. They were expected to lose like 79 cents a share. They only lost 19 cents a share. So that was good. Revenue beat estimates. Same-store sales dropped 20%. But that sounds terrible, but that was better than the 23 that they expected. So some good things there. Still, just because of the whole situation, they're still taking it on the chin this morning, down 4.5%, actually 4.8% now.
I was wondering why, after you told me it wasn't all that bad, and I saw them toward the top of my big losers list this morning.
Yeah, they're just not getting any help from even though they did better than expected. So, hey, let's go to the BJ's Wholesale, another warehouse club. They did earn some money. They made 92 cents a share compared to the 64 they were expected. Revenue was ahead of forecast. Same store sales beat by about 2%. But again, they were taking it on the chin a little earlier too. I'm not sure if it's just retail in general right now with all the closings, and that could be it, Dave. It could be with what people are seeing in terms of states going back down to that lockdown mentality, that we may start to see retail take it on the chin across the board. They're down 1.2% this morning.
Kind of the usual suspects seem to be on the downside this morning that you'd expect to respond in pre-trading. Things like the big mall owners, Simon Property, things like well, I'm surprised at Progressive Insurance, but a lot of the usual suspects are kind of suffering based upon the news items from yesterday.
They are. I've got one more retail for you.
Yeah.
And this one is a surprise. So L Brands, which is the Victoria's Secrets, Bath and Body Works, that brand. So they did okay. They earned $1.13 a share. Let's just say that was well above the 9 cents they were expected to make. Pretty good beat for them.
What, 9 cents, and they did $1.13?
Yeah. So pretty good for them, huh?
Wow, I saw them at the top of my winners list this morning, and I figured they had to have been reporting.
Yep, revenue exceeded estimates as well. They saw record sales growth at its Bath and Body Works chain.
Ooh, good news for one order.
Yeah, and you add that to the rebound that they've seen in Victoria's Secret's operation. They had some really good news. They're trading up almost 18% this morning. They'll open up at a new 52-week high.
And it looks like they're accelerating too.
Yep, they are. So good news there. I
got
got two more. I got two more names for you. One of them we don't really have here, but it is still a name that everybody recognizes, and that's Jack in the Box restaurants.
Oh yeah. Mm-hmm.
They came in at higher than expected by about 45 cents a share. The chain topped forecast in terms of revenue as well. Same store sales were up double what was expected. I mean, they were up 12%. And so they're getting a big push today. They're up 6.5% this morning, and they'll open at a new 52-week high also.
Cool. When you place your order in the clown's mouth, he'll smile at you today.
Oh, me. Hey, the last one I have for you, and this is not a household name unless you're a real electronic speaker geek, Sonos. And the only reason I recognize it is because I've got one in my office reception area to play music through, and so it's a Wi-Fi speaker system. So they earned 15 cents a share. They were expected to just break even, so that was good news for them. Their revenue was up. They saw sales jump 15%. So that was good for them. Their direct consumer business had a 67% growth rate.
Whoa!
Yeah, out of the park. So they had a really good quarter and a good going forward. So again, they're another one that's going to open at a new 52-week high. They're up 19% this morning.
Cool. There is some good news to be had. Resetting the table of red day yesterday, all pretty much on the strength of the last 3 hours of trading, or the weakness of the last 3 hours of trading. News ain't changed much since yesterday afternoon, so I'm assuming we're looking at red ink 45 minutes early, aren't we?
We are looking at red ink. We have everything's down about 0.2%, Dave, across the board. The Dow's down $58. The S&P 500 is down $7. The NASDAQ's down $20. So that's about 0.2% across the board. On the commodities side, though, we're seeing red ink too. So it's red ink everywhere this morning. We've got silver down 2.3%, and we've got gold down 0.9%. And crude oil just couldn't quite get to green today. It's down about 0.2% now, $41.92 a barrel.
All righty. I can't change the color scheme looking across the pond either. Red ink in Asia, not big red ink, about 0.5% at the close on their markets. Great Britain and Germany are both trading down the better part of 1% halfway through their day as well, largely on the news coming out of the U.S. Phillip, it's one of those times, can't control the risk, and you sure as heck can't control current events. You can, on the other hand, control the issues you got in your portfolio and the amount of risk they have. How do I find you to find where that risk is?
Okay, then give us a call at 863-382-0037. You're absolutely correct. The only thing that we can control in a portfolio is the amount of risk folks have. And they need to know how much risk they have in their portfolio. Then they go to my website and they can schedule an appointment there. Catch us this weekend for the Statler Financial Radio Show. We'll be on at 6 a.m. I know that's early on Saturday morning this week, and Sunday morning at 10 a.m. on Highlands News Talk 730.
Alrighty, and again tomorrow here on Light FM to catch you up to the minute. Phillip, thank you so much, and we'll see you then, all right?
All right, man. You have a great day.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, I want to thank you for joining us today. I hope your day goes well today. Remember, if you don't know the risk in your portfolio on a scale of 1 to 100, you need to get our financial x-ray. And give me a call to schedule yours, 863-382-0037, or you can go to my website, statlerfinancial.com, and right there's a link that you can get on my calendar. Hey, have a great day. I look forward to seeing you again tomorrow.